Okay, the other videos I've done are where you could possibly be one day. And that's why I recorded them. That's why I wanted you to see them. We, the market just opened. The market's been open for 15 minutes. Right now, uh, overnight, the Fed said they will provide unlimited dollars to help everybody out during this crisis. And it's to keep the stock market up. So I I listen to the Hedgeye guys, hedgeye.com, and they have several products that they sell on a monthly basis. And I listen to their macro show. As I've mentioned before, um, have somebody. I always listen to somebody who's smarter than I am. Okay? For example, Steve Rhodes on TFNN. All the guys on TFNN are smarter than me as far as the market's concerned, so I listen to them, but mainly Steve, as I have mentioned. Um, and they have, on the macro show, they have what they call risk ranges for the S&P, gold, so on and so forth. Um, but I also have my own strategy that as you know, I really like. Um, so what I'm hoping to do is find a trade and show you how to get into a trade. And right now, I'm expecting a bounce in the market. Keith gave us the range of 2138 and 2548 in the S&P. The SPX is the S&P, okay? With the announcement from the Fed, I'm expecting a bounce here up to 2548. 2548 is right about around in here somewhere. Okay, I'm actually going to bring this down. Now their risk ranges, they have a risk range service that I don't subscribe to, but it's a good one. Um, they and what they do is exactly what I just mentioned. The bottom of the S&P today is expected to be 2138, and the top is 25.48. Now the ES is the futures for the S&P. You can trade options on the SPX, which I do, but you can't, it's not a stock, it's an indice. And what I'm looking for here is I'm looking for the OUL to support on a 30-minute chart. Just because I expect a bounce before we head lower. Now let's see, the top of this candle is 24.42. Now what's kind of difficult sometimes is to determine where the SPX is going to be if the ES gets there, because the SPX is the underlying for the futures. So right now the SPX is at 22.55. The ES is at 22.50. So about a $5 difference. So I'm looking for the OUL to support right now. And for those who start using the crossover, you have a crossover. What we don't have is the MACD to the zero line yet, which we don't have to have. It's just nice to have if you're going to go long. Okay, so we're going to see what transpires here. If the OUL supports, I'm going to go long, and I'm going to show you how to put on a trade. Okay, I'll be back. Okay, we have the first 30-minute candle of the day right here. The OUL supported, and we have a hammer after coming down to test this. Now what we're getting is a test of this hammer. Now when you get a hammer, you want it to be tested. Price comes down halfway into the hammer and heads higher, or if price comes down halfway into the hammer, that's the point to go long or to enter the trade. Okay, so this is the trade screen. Okay, right now I'm looking at the ES, the S&P futures. Okay, and this process here is for every trade you will do. This ticker here it just changes. This is all the options that are available, but we're only going to enter a futures trade right now. Okay, so we got our test, and I want to get into this thing. Okay, when you click buy, you have bid and ask. Bid is sell, ask is buy. I'm going to buy one contract of the ES futures. I confirm and send. Okay, and it shows me I'm going to buy one to open. It's going to take $13,200 out of my account for margin. It's not gone. It's just set aside in case I have a losing trade. And I'm going to send it. And there you go. I got filled on the ES futures. You come over here to the monitor tab, and there's my trade right there. Okay? So right now, the trade's going in my favor. Okay, we go back over to the chart and we let this work. Now, as I've said in the other videos, I have resistance up here, right? So right now, my initial target will be the high of this candle. Now let's look at the SPX again and see where that candle might be. Let's see, that candle was Friday at 9 o'clock in the morning. So Friday at 9 o'clock in the morning. Okay, the top of this candle is what will be in the futures, in the SPX. Now, you see that there really isn't anything below this, is there? Is there? That's why I'm trading off this hammer. For the if I was in the SPX, and I'm not, I'm in the futures. They're two different things, but you want to keep an eye on this. The next thing I need is a close above this hammer. Just like in the ES, I need a close above this hammer to have a little more confidence in my trade. Now, after entering a trade, the very next thing you need to do is put in a stop. What I do is I put in a stop and a take profit. And that is what is called an OCO. Okay? Now, in this case, I'm going to put my stop underneath this hammer. So my risk management is really nil. The reason is because if my stop is hit, I'm not going to lose anywhere near my 1%, right? So I don't even have to figure my my risk management numbers. Now, in a daily trade or something like that, absolutely I have to. Or if, you know, for some reason I have to give my 30-minute trade a lot of room to work. But there's a rule that Steve uses. If you trade off of a hammer and you get a close below that hammer and you're long, you're wrong. Because a hammer is the single most bullish candle on a chart. Even hammers need confirmation. I didn't wait for confirmation on this because of the other things that are going on in the market today. So you can kind of, judge it by that. So I'm going to put in a stop, let's see, right around 22.14. And this has to happen for every trade. If you don't put a stop in, you're telling the market you know more than it does. And guess what? You don't. Neither do I, and neither does anybody else. So 22.14 is going to be my stop. And remember, this one candle is resistance. The top of this candle is 24.42.50. 24.42.50. Now, now remember, the Hedgeye guys said SPX 2548, right? 2548 is up here. So it's going to be above that one candle, isn't it? Well, and I'm putting my take profit up here, just above this candle, but the daily target is actually a little bit higher. If price does get up there, up here, okay, then I can move my take profit up a little bit. And the way you put a stop in is you go back to your monitor page, you you click the you click the vehicle that you're working with, and you right click it. You right click this and create closing order comes up. And I'm going to put with OCO bracket. OCO one closes another. So if one of them gets hit, the other one cancels out, regardless which one it is first. It doesn't matter. You have a stop, which is your most important thing, and you have your stop limit. Okay, which takes your profit if it gets up to your profit. So I'm going to put in 2442.50. So you just click it, back out of it, 2442.50, and my stop is going to be 2214. Confirm and send. Send. Now on my chart, you will see where my stop and my take profits are set. Why is this doing this? I don't know. So my stop is right below my hammer. Okay. And I have it quite tight right here, don't I? So if you want to change a little bit where it's at, you can just click it with the left mouse, hang on to it, and drag it down a little bit. That's the same thing as if price gets up here. If price gets up here and I'm sitting here not doing anything else, and I want to see if it's going to take out that resistance, well, I can just move this up a little bit. Okay, that's how you do that, and it'll change all your numbers over here where I put them in. Okay, this will sit under your working orders. Okay, I have two working orders. My stop at 2251 and my stop at 2201. Wait a minute. 22. I moved it. 2201 and my take profit at 2446. Now, knowing what you know about trading, learning what you've learned about trading, and you and you've gotten comfortable with your trading, you can set this and go do something else. You can set this and go to work. Okay? Because you know your risk. You figured out your risk management, your 1%, 1% of your working capital, and you have your take profit. So in time, one of these is going to get hit. Doesn't matter when. If it hits your stop, you're wrong with the trade. If it hits your take profit, you were right. You can go off and do anything else you want to do. That is how a trade is done. In this video, I'm not really worried about showing you if it's going to work or not. I just wanted you to see the mechanics of the trading platform, how to do a trade, excuse me, and how to set your stop and your take profit. Because, I don't know, I might go out and work in the yard today, and this trade will work or it won't. And if you are only risking your 1%, you know the odds are in your favor. You're above the OUL. You got information from someone you listen to that higher price could come to us, at least for part of the day. And the Fed just told the market it has unlimited cash. So you can go to work and let your trade work, and you have zero concern. You're not stressed out about your trade. You're not stressed out about making money. You know that you're within your risk parameters. You know that you're working your edge and that you are confident in your trading. Go to work. Tell your buddies, yeah, I'm in the S&P futures right now. And TD Thinkorswim also has a trading app for your phone. You can do the exact same stuff on your phone as you can on the trading platform here. I don't use mine except for really situational stuff. I don't suggest you put the app on your phone to watch every tick. There's no need to. There's no need to watch every tick. You know that you're going to be out if this gets hit or if this gets hit. Preferably this gets hit, but this might get hit. But either way, it doesn't matter because you have your risk under control. And that's the key, your risk. Okay? Thanks for listening.